Hey, Marianne Elliott from 360 Mortgage Solutions. So today I wanted to jump on and have a chat to you about how much deposit do you need to get into your first home. To be completely honest with you, that's actually a loaded question because the answer can vary from applicant to applicant. Typically, your ideal deposit is 20% of the purchase price plus costs. And when I say plus costs, I mean if there's any stamp duty applicable to you because you don't fall under the threshold of getting it waived. If there's some solicitor costs and searches, and there's also some legal fees as well, like land transfer duty, registering the mortgage and things like that. So that's your ideal deposit, but let's be honest, for a $500,000 purchase, that would be a deposit of $100,000 plus costs. And these days, typically, most first home buyers don't have access to that kind of cash. So what are your other options? Well, to start with, a really common one I'm seeing at the moment in the market is guarantors. So getting your parents to use their property as security means that you don't need as much deposit. In fact, it means you don't actually need any deposit at all. So we still need to be able to show the bank that you can afford the repayments and that that money will be paying off the loan. But in many cases, you can use whatever savings you've got set aside for any work that needs to be done to the property or as any safety net backup. Or you can use your deposit towards the purchase and therefore not need the guarantors to stay on the loan as long. The other option is an 8% deposit. So with an 8% deposit, you fall just under the cusp of what we call 95% LVR with lender's mortgage insurance included. So I know that sounds like an absolute massive mouthful, but basically what that means is you're borrowing about 92% of the value of your property. And when we add on the lender's mortgage insurance that you get charged because you don't have the full 20% deposit, then you usually fall just under that 95%. So the total loan, including fees and charges, is just under that 95% of the value of the property. Now, with many lenders, this is still considered a slightly riskier loan, but it's not so risky. So there is a slightly higher interest rate, but we're certainly not talking a massive jump in interest rates. Now, the final option you have is a 5% deposit. And there's two ways you can go with this. If you qualify, you can get on the 5% government schemes. So this is for rural homes, new homes, or existing homes. Places are limited, and it means that your lenders you can choose from are selected, but these lenders that you can choose from are fantastic lenders. There's some smaller ones, some larger brands that everyone's heard of, so there's a nice variety there for you to choose from, and it means that you pay no lender's mortgage insurance. So it's just like if you have your parents going guarantor, but instead you have the government going guarantor. So it's a lot cheaper for you, and you can get in with just 5% plus your costs. And if you don't qualify for the scheme or there are no places available for your particular scheme, then 5% will get you into your property, but it is considered a riskier loan because when we add on that lender's mortgage insurance charge, you're looking at sometimes it's up to 98% loan, so 98% of the value of the property. So what the bank looks at is if they had to fire sell because you'd stopped making payments and property prices had fallen just a little bit, they are very, very likely going to lose money on that loan. So because the risk is much higher, so too are the fees and charges and the interest rates. But in short, they're all your options. And like I said at the start, it's a loaded question because it really depends on what is available to you. Are there guarantors that could potentially use their property as security for you? Do you have a large enough deposit that can get you in? Or do you qualify for the government schemes that will definitely go a long way in helping you get into the market? The best option for you, if you're sitting there thinking, those all sound really great, but which one is best for me, is to make an appointment to have a chat to a mortgage broker. And the reason I say mortgage broker and not bank is your bank may not have access to the government schemes. So it's not something that they're going to recommend because they don't have access or places. Whereas a mortgage broker has access to over 30 different lenders and banks on their panel who all have different policies, different lending capabilities, and access to different schemes. So definitely talking to a mortgage broker is going to open up more options for you. And at least then you'll know how much deposit you need to be striving for to get into the market. So otherwise, guys, that's it from me. Don't forget I have the First Home Buyer program, which is an online course, and it's aimed at getting you not just through what deposit you specifically need, but also it'll take you through all the steps you need to know before you even start that home buying journey so that you can really tackle it with the right knowledge behind you. It gives you online access forevermore. So you don't have to necessarily be preparing to house hunt in the next 3 months. It can certainly be something that you start planning now, and then when you're looking to jump in, you could run through the course again just to refresh. So I'll pop the link for that below, but otherwise I'll also pop the link if you want to book a free online Zoom appointment with me, and we can take it from there. So that's it for me, guys. I hope you have a fantastic day, and I'll talk to you next time.